Welcome to the Ideal Investor Show. This is the podcast where we help you challenge your mindset and discover where you are. Tired of stories about other people's success? We can help you change your life, determine your time freedom point, and join us on the journey to financial success. Let's go. Hello and welcome to another episode of the Ideal Investor Show, where we bring you great guests who can help us see the whole spectrum and all the different opportunities to generate cash flow. And we have somebody special with us today. It's Kevin is with us, and he is helping his clients through courses and actual, like hand holding. Like I always say in our approach, I take you by the hand and help you take and make the investments just like I have and keep doing them. And Kevin does the same. So Kevin, welcome to the show.
Thanks for having me here, Axel. Glad to be here.
Absolutely. We're really excited. And especially, like I've heard a little bit Forex and stuff, but I don't really know what it is and how it works and how you can make cash flow from it and so forth. So you got to educate me and our audience today a little bit about that. But before we go there, or maybe kind of like building a bridge to go there, can you tell us a little bit, like, where you're coming from? How did you get into money stuff, and how did you end up in the situation between, or I should maybe say, the offerings and the courses and stuff that you currently offer?
Kevin Jefferson from Dallas, Texas. And actually, how I got into the industry, when I got out of the military in '99, I went to work for Georgia Pacific, which is a manufacturing company. So it was not related to finance at all. So that was my first year out of the military, and I went through their fast track management program and learned a lot about really just business, corporate, because, from design, customer service, shipping, sales, manufacturing, all of that stuff. And it was a great entree into what I consider into the corporate realm, coming from the military. And so with that, it was a great, like you say, a great conduit, but my heart had always been towards finance and wanting to be in the financial realm. And so what I did back in the early 2000s, I would just go to the bookstore, be at Barnes & Noble. This is before the internet was as robust as it is today. And I would just go and study, what it would take to become a financial advisor, about fee-only planning, all that stuff, ADV forms, and, just really picked up a lot of books and did a lot of reading to say, okay, how can I break into the industry without having really any way to get connected? And so I think that was really the most probably the most interesting part of the journey, is that I was preparing myself for something that had not happened yet. And then in 2001, in November of 2001, I received a phone call from a headhunter who was recruiting former military officers and NCOs. And so being a former military officer myself, they called and asked, what would you think about becoming a financial advisor? And so it was really interesting because, I'm big into, on a personal note, I'm big into manifestation and big into visualization. And I know that for several months, if you looked at it, anybody looking at me through a window would have been like, this guy's an idiot. Like, why is he doing all of this stuff? Like, this is nowhere near anything that he's doing or has done in his life. But I think I was preparing myself for that moment. So when I got that call, even though it was 2 months after September 11, 2001, from a time frame standpoint, it seemed like very interesting times to like why you would want to go into finance. But I was just so committed to my goals and my dreams that I took the opportunity and got connected with Merrill Lynch. That was my first financial advisory job. I was a stockbroker with them. Then I got recruited to Edward Jones, and then I started my own outfit in 2005 as an independent advisor. And I was not living in Texas. I was actually living in Alabama at the time. And then I moved back to Dallas in 2009. And between 2008 and 2009 is when I stumbled across Forex, actually, with CNBC, the news channel. They had this thing called the Portfolio Challenge. And I don't know if they still do it now, but I had participated, multiple times over the years as a civilian, if you will. But then when I became an advisor, I kind of got more into it. And in 2008 was the year that they actually added foreign currency trading as an asset class to the program, or to the contest. And so what the contest was it allowed anybody to basically, they gave you $1 million of notional money, and you could create your own portfolio of anything that you wanted. And so I did a lot of ETFs, which I was into, a couple stocks, couple things I knew about personally. And then that back then the euro was, roughly twice as valuable as the dollar from a comparative standpoint. And so I bought a lot of euro. And I didn't have any concept of what leverage was or what made that asset work. But when I came back to it a couple of days, a week later, when I was checking the portfolio to see how I was doing, the portfolio had grown exponentially. Like it had grown like way more than you would ever expect. And I don't remember what the number was, but it was really big. And so I went to see which of my assets had performed, and it was the currency assets that I had bought, the euro versus the dollar. And so that piqued my interest, and they, I think, did their job, which is to get you interested in things that you don't know anything about, right? To get you go down that rabbit hole. And so I opened up an account and started, teaching myself through finding stuff online and what the brokers would give you, teaching myself how to try to trade the currency markets. And so in 2008, 2009 is when my journey started. And I went through that frustration, just like everybody else does as a trader, whether you're trading equities, commodities, whatever it is you're trading, futures. There's a period, what I call it kind of a dark period where before the dawn, that if you don't give up, you might actually make it. And so I stumbled across it. But then when I found it and I got into it, and I gave a lot of money to the market, to be candid, I could have probably paid some scholarships for some young children for what I gave to the market. But I didn't quit. After 1 week where I had taken a trade, and it really went against me. And I always laugh about this, and I've shared this on other visits I've had with people, but I call it like this is a pivotal point in my journey as a trader. I thought I was ready to trade, and I put, some money in an account, maybe $30,000, $40,000, $50,000 into a trading account. And then I proceeded to start trading, and I didn't really respect leverage or risk management like I do now. And so I got out of the money about $10,000, let's say, and I saw it go against me, and then I saw it kind of inching back up, and I remember praying, God, if you just get me back to break even, I'll get out the trade, and then the trade moved back literally right to break even, maybe a little above it. And like most centers do, I didn't close it out. I was like, well, maybe it's going to keep going. So it never came back.
Yeah, right.
It went against me. It went against me. And I literally spent the whole week in my house, on my couch, with my laptop, waiting on this trade to come back. And then the unemployment numbers came out at the end of the week, and I ended up hedging against myself, and ended up, instead of losing 10,000, somehow I ended up losing 30,000. So that was my pivotal point in trading, because after that sick feeling in my stomach, in my gut, like, what did I just do? What did I just do? I got myself together, and I had a little money still left in the account, and I literally was like, well, shoot, I still got a chance, and that's the craziest thought to have, but I really didn't believe that was how it was supposed to end. And so I just started, I slowed down, and one of my childhood friends, actually, I give him a lot of credit for kind of where I ended up going, I guess, because he told me about a gentleman who did know how to trade and who had learned from an institutional trader. And so I took $5,000, flew out to Florida and spent a week with the guy and paid to learn from him. And then that really changed everything for me. So I got the instruction and the guidance from somebody who had already done it. And then that year following, I, practiced this method for a few months. And then after that, I felt like I was ready. So I launched some more money into my account, and I went for it. And I was very aggressive, because I was just at that point in my life, several years ago. I was, wasn't even 40 years old, didn't have any children, wasn't married. And so I had a lot of room to be aggressive. And that really kind of helped me become successful really quickly. So successful really quickly is 2 years of pain or a year and a half of pain, and then you have 9 months of success, and then you say, okay, maybe we got something here. And I was able to essentially replace what I was making as a financial independent advisor with trading. And so at that point, I was like, okay, we got something, and I just started building from there. So it's it seems haphazard, but it's all been kind of it's all been working out in my favor.
Yeah, that sounds like one of those stories like overnight success, years in the making, right?
Exactly right. I always tell people, hey, you can call me overnight success, but as long as you acknowledge that it was the longest night of my life.
Yeah, exactly. Before we dive into this a little more, you mentioned that you were in the military. I was in the military, so I think we owe it to each other to check real quick. What did you do in the military?
Yes, I was a field artillery officer, actually. So the different variations on a theme as whatever that related to. Being a fire support officer, I was connected to a tank unit. We fire direction officer, where you call fire on targets downrange and all that stuff. So yeah, I was in the big missile business.
Oh, okay. In the Army, I assume.
Yes,
right?
in the Army. Yes. What about yourself?
Okay. Well, I was in the Air Force, and I'm always interested to hear what other people did.
But otherwise, we're very much brothers and sisters in arms. So
exactly. So going back to the Forex, one thing based on what you described and how you got into it, I wrote down here on my little notepad. wanted to ask you, do you know about the Japanese investing wives?
If you could elaborate on that when you say Japanese investing wise, like as
Well,
far as their
the,
currency?
well, the Japanese currency and treasury bonds were treated in a particular way, and Japan, as far as I know, I think is the largest holder of U.S. treasury bonds, either number one or number two, like insane amounts of money. And there's
Yeah,
obviously a relationship between the US dollar and the Japanese yen. And
right.
I don't know, I don't recall exactly what the trigger was, but there was supposedly some event, must have been like in the 80s or maybe 90s or so, where the economy must have had a downturn and stuff. And then the whole community, triggered by somebody, one woman who wrote a book about it, if I remember the story right, on how she basically discovered this kind of exchange, the currency exchange and treasury exchange trading, and wrote a book and must have inspired like thousands of housewives that actually applied that method. And I'm only asking because you have your PPC 13 method, right? And so there are probably a whole bunch of other methods out there. And it became kind of like a famous story in Japan and then in some places also beyond, because these Japanese housewives oftentimes beat the so-called quote unquote professional traders, right? And
Right.
they only did it like an hour a day. They were super diligent, very structured,
Discipline.
but also disciplined, like stuff like that. So when you said, you kind of stumbled upon it, I was wondering if you ever heard about that community. It's a really cool story.
I will have to find that, or please send that to me. I haven't read that story. I've heard so many stories, but I'll be honest with you. I don't believe like that completely does not surprise me. I tell people one of the things that I learned over the 15 plus years that I've been trading currency is that a lot of the things that we think are necessary to be successful are not. Like it's very simple. It can be very simple, and you don't have to spend a lot of time on the charts. And in matter of fact, I always tell my students that the less time you spend in front of the screen, the better chances you're going to have the outcome that you're looking for. And so I completely did not doubt that they did that and they beat the quote unquote experts, because just going back to when I was a financial advisor, one of my biggest frustrations when you're trying to make recommendations to a client, if they're not buying the individual stock, you're trying to get them into, back in the day it was mutual funds, and then we started moving towards exchange traded funds, which were more efficient, obviously from tax and other reasons. The challenge was so few of these active fund managers, very few of them actually beat the index that they were looking to beat. And so it's very challenging to advise somebody to take a position with something where you could just buy the index and actually make more money at a lower cost. And so it doesn't surprise me at all. I just wish I had been a part of that ladies trading group. I would have
Exactly. Yeah.
yeah. So,
Well,
and
it's in the documentary. It's not really going into that direction, but I'm a kind of person, coming from the flying. It's for me the world is very visual, and I live in kind of analogies and little stories and pictures and stuff. And when I saw that documentary, I'm like, I wonder the scene, right? Like the husband in their attire, like Japanese, very formal, coming back from working somewhere, and they have like, "Honey, how was your day?" And the wife is saying, "Oh, I made 2 grand this day. How much did you
right.
make?"
Exactly. What about you? And I didn't break my back. Well, I didn't bust my can maybe like you did. So,
I sat here in my kimono or something like that.
there you go. Right. Yeah. I wonder now we got to wonder what the divorce rate was, if guys getting upset about the
Well,
fact that their spouses are making
it
more money.
doesn't really, if I remember right, it doesn't say anything about how many of those housewives became sugar mamas.
That's it right there. That's it right there. That's
All
it.
right, so let's go maybe wind back a little bit, and can you just for the audience, since we're all obviously not traders, we're investing typically in real estate, but what is Forex to begin with? Maybe we start there.
Sure, that's a great place to start. So Forex is short for foreign currency trading. So what foreign currency trading is in a nutshell is I always tell people or give my students or people who are interested in learning the analogy of taking a vacation. So when you go on holiday, you take a trip. And I use Mexico because I'm in Texas, and so it's a little bit easier for people to grasp. But when people go to Cancun or wherever they go, before you go, most times you're going to exchange some of your U.S. dollars for pesos.
Right.
And so once you've done that, you've already initiated what's called the first part of a currency trade, because you've exchanged your currency for the currency of another country with the expectation of it holding a certain level of value. And so once you go and you enjoy your vacation and you come back home, what happens is somewhere between when you leave and when you come back, you normally exchange what you have in pesos back for dollars. And in the currency trading world, that's called a round turn. And so just like you took a round trip on a vacation, your money did the same thing. So what you're doing is you're exchanging the currency that you have for the value of the currency, another country's currency, with the expectation that the difference in the values can give you profits. And so if, let's say, I trade coincidentally the British pound versus the Japanese yen exclusively. And so when I buy the British pound, I'm simultaneously expecting the Japanese yen to go down in value. And so when I take that digital trip by buying the British pound, I'm simultaneously saying that I'm selling the Japanese yen. And at some point, I have to make that round turn by selling the pound and buying the yen. And so my goal is for the value of the pound to have risen relative to the yen over the time that I held it. So like while I'm on that digital vacation, I'm wanting the value of the pound to go up and the value of the yen to go down relative to it. And the spread or the difference between those prices is what you secure in profits. And then on the other side, you can do it as well. You can, sell, or what's called shorting, just like you can with stocks. You can actually start off selling the pound and buying the yen if you think the opposite is true. And then at some point, you have to close the trade out and take the counter position. So it's really just exchanging money digitally, throughout the world. Now, what makes it work, though? I want to kind of add this to it, because that's the kind of the high level. But people will ask me, how, I don't see the dollar fluctuating that much. I don't see, these currencies fluctuating enough. So how do you make money when, a dollar is still worth a dollar from what I see? And so the way it works is we're actually trading infinitesimally small amounts of money. So we're trading pennies on pennies, 1/1000th of a penny. And then the values or the changes in those, we use leverage, or institutions use leverage to actually make it make sense, right? And so a dollar in the stock market literally, would have to go up by 100% to become $2 in the stock market. But in the currency market, a dollar, because of leverage and because we're trading such a small amount of money relative to the changes in value, a dollar could literally get the buying power of being $100. And so if you get a dollar that can function like it's $100, if you're smart and you do it right, all you have to do is grow that account, grow that dollar by 1% to get the same dollar outcome, right? And so it's really the power of leverage allows you to get substantial outcomes without having to deploy large amounts of resources financially.
Understood. Yeah. And so is there any kind of similarity in the actual trading that you're describing to options? Because the way it sounded to me, or sometimes looks to me, even though I'm not in that field at all other than an observer, is in options, the way I understand it in the stock market, you can see I get an option for the privilege, so to speak, of buying 100 shares, each of which might be $1,000. So that would be $100,000 in value. But the privilege to be able to buy it at the price of, let's say, $10 costs me $1, right? So if now these shares go up, even by just a little bit, right, then I can say, okay, well, the dollar that I spent for the privilege, I can now sell the privilege, because obviously somebody is going to make a profit if they were using their privilege and buy the shares for a lower price and then sell it for a higher price and keep the difference. Is that kind of similar to what you're doing?
Absolutely. Absolutely. So options is, options are obviously derivatives of stocks. And so that's what you're doing, is you're controlling large amounts of stock, like you say, they go in.
Right. Yeah. And I was wondering, since you said you're not really buying directly the $1 or $100 or $1,000, you're buying. And I saw these two terms, maybe they related. You in your video, you speak about lots and pips.
Yes,
What are
yes.
lots and pips?
All right. So yeah, right. So a lot is when you're talking about a contract in let's say futures, or if you're talking about what you're saying with options, having a contract, a lot is the size of the investment that you're going to make at any given time. And so one standard lot is like say a $10. And then you have micro lots and mini lots. And so you have a mini lot, which is like $1, then you have a micro lot, which is 10 cents. And so one standard lot is like having $10 per amount that you have in, right? So for every dollar you have literally the ability to control $10 of that currency.
So you have, it's kind of like, I call it a privilege to have access to the $10 by having $1 in a lot.
Right. Yeah, just like
Okay.
the options have, like the options basically, would you, when you say the privilege, as a stockbroker, we used to call it the right, which is the privilege, which is basically a coupon, right? You've got that's the difference though. Like, options is a coupon that may or may not be exercised, but in the currency market, once you take a position, you have to exit at some point on the other side. But yeah, a lot is just the size of the investment, and then pips is the unit of measurement that's used to understand how far the currency is moving. So in the stock market, you have what's it called, points, and so in the currency market, it's just called pips because you're talking about fractions of a dollar that you're trading.
Okay, understood. Yeah, I used to use the term contracts, but when we started having crypto, that kind of muddied the fields a little bit because there's a lot of the use of the word contract in crypto, and so that's why I call it privilege.
Yeah, no, I get it. No, I get it. The lingo starts to get convoluted.
Yeah, exactly. Now, so with that being cleared, so we're basically, if somebody is interested in doing this, you can benefit from the different values of two currencies to each other. And the benefit, if I understand it, or the cash flow, as you call it, comes from if I happen to buy my pesos, let's say for $1, I get 100 pesos, and then I'm staying on vacation for 3 weeks and something, whatever weird happened. And so the peso is falling rapidly and I might do the vacation. And when I convert back, then I only get like whatever, $50 or something like
right,
that.
97 bucks, whatever. Yeah, exactly. So yeah, so if it goes against you, you get less back, and if it goes for you, you get more back.
Yeah. So right. if we build the wall and no more people coming across the border, then suddenly we get more back, right?
Right, exactly. We got more. It's more valuable now. So.
All right. Okay, cool. So that makes sense. Now, with that in mind, we know what lots are, we know what pips are, we have an understanding what forex is. So, what is PPC 13, the thing that you do? And I know it's proprietary. So, if you say, "Hey, I can tell you without you giving me $1 million," I understand.
No, I appreciate that. No, it's not that deep. So that's the method that I devised and simplified from what I saw in the markets, and so it basically stands for a pullback, a pattern, and a close above or below the 13 EMA, exponential moving average. And so that's kind of a high level and simplified version of when I tell my students how to approach a trade. When they see certain things happen, a pullback within a trend, a certain pattern, which is normally called a reversal or continuation pattern, and they look different ways, right? So they can have different ways that they appear, but after a certain confluence of events, you get the pullback, the pattern, and then the close kind of solidifies that the trend is actually going to sustain itself. And so, there are other things that you have to look at, obviously, in the market about, where actually the price is and where things are relative to where it's been. So you can't just take every pattern, obviously, but essentially that's my methodology to tell my students it's not as complicated as people want to make it, as long as you understand what you're looking for. So yeah, PPC 13 is just my approach to taking good trades.
So, and then I would assume if somebody were to say, okay, I take Kevin's course and I kind of educate myself, and then people kind of do pretend trading for a while to kind of practice the things to look for and how to identify stuff, or how would somebody that has never done it have to imagine this to work?
No, great question. So yeah, I'm obviously a big fan of paper trading first, what we call demo accounts. So, the beauty of a demo account is, first of all, you get the ability to kind of mess up and understand what's all involved with even the technical aspects of taking a trade, right? So it's like, you can have a car, but every car is not made the same. And so it's sometimes smarter to go through a simulator to understand what you don't know before you go out and get on the road. And so it's the same thing with us. I'm a big advocate of my students, starting off with a demo account, and learning along the way while we mentor them and kind of get them on par. So yeah, they definitely use practice accounts, But then what happens is a lot of people don't, for whatever reason, they don't want to miss out. I guess it's human nature. And so what we did was we added a portion to our course to where we would allow our members to establish a live account, fund it themselves, and then we would actually help them trade that account live while they're learning. So that way they didn't feel like over the 9 or 12 months that they're learning how to trade or whatever, that they didn't miss out on 9 to 12 months of possible income. So we do that for them as a service, as members, who we'll trade, copy an account for them along the way. So that's how we kind of combine that.
Yeah, and I thought it's actually one cool thing, and tell me if I understood this right when I prepared for our interview today, is that you basically offer people to, I don't know what you would call it, lock in with you or hold hands with you or whatever the right terminology is, to basically doing the exact same thing that you're doing for a while, just not just to copy, but also I would assume you would do the trading that you do, but then also give a little bit of an explanation why you're doing what you're doing, right?
Right. So there are 3 parts to that. So yeah, we copy trade. So that's actually, we automatically execute our trades. And if they decide to use that part of our service, which is, it comes with it anyway. Then when we make money, they make money. When we lose money, they lose money.
Right.
So that's the automated piece of it. But then in addition to that, you're right. What we do is I actually send those exact same trades out to my students. So even if you're not connected to us by the trade copying, if you chose not to fund an account, you get the same trades sent out through a private messaging service with the entries, the stop loss, take profit, time frame in which I took it. And the premise of that is for you to either, confirm that trade aligns with how you see the markets and take the trade. And it also gives us a central point of discussion as a mentor and students to say, okay, what were you looking at here? Why did you take it on this time frame? What happened there? And so now we're kind of all looking at the same data together. And then on once a week we get on live Zoom, basically a tutoring session called Money Day School. So normally on Monday nights we'll get together and I will explain the outlook for the week and answer any questions they have regarding the trades that we're taking. So we really try to mentor and do it in real time, with real trades as often as we can, because I think the real trades, rounds down range, when you're on, whether you're actually sitting at a firing range and shooting rounds down range is just not the same as practicing without feeling all of that comes along with actually live fire, right? So we try to do as much live fire as we can. Yeah,
that's the same thing that I always said, like I was an instructor in flight training, and it's obviously different when you're doing training in the simulator, because if you just do something wrong, it actually gives you like the indication of a fireball, but then you just unstrap, go out, you get a bad grade, obviously, and then you can
you lived.
Right, but that's still way different than if you were to do the same thing in the real plane. And it's not just because the thing, like the latest planes cost like $130 million a piece, so that's one thing, but it's also your life at risk, right? So
exactly.
So that's, simulation is important too, especially when you want to establish habits. I think that's great. Now, in a way, I have 2 more questions that I wanted to definitely get in. The one thing is, can you give us a little bit of an idea if somebody is listening to us and says, okay, I would like to add that to my investing portfolio, my approach for diversification or stuff like that. Is there a minimum amount of money that they should assume to start with, and what can they, and I know there are always extremes up and down, but if you say somebody is applying the system and what you teach and stuff like that, what is a reasonable expectation of outcome?
Great question. So the first answer, as far as the amount, I get that question a lot, and you can start with a really small amount of money, literally as little as $100 with a micro account, right? So that's one way to get started and kind of get your feet wet and not feel the sting of losing as much as you would if you had 10,000 in an account.
Right.
But I think, when people get serious, I always tell them, you should start with, $5,000 to $10,000 in your account so that you can actually have success and move the needle, right? Because I think there's one of the things you have to be careful with is the psychological output that comes along with trading, just like anything, right? So if you get rewarded for your success, it tends to make you do more of it. And then if you get punished for it, makes you tend to do less of it. But only if what the punishment and the reward, if you value them, right? And so when you have those larger amounts of money, you generally value the outcomes a little bit more. But I would say more importantly than the dollar amount, I would say that you should be able to get up to about a 60 to 80% win rate. And win rate is not everything, but if you have a method that gives you an edge, you should probably hit 6 to 8 out of 10 trades, and then that would be how you become more profitable. So I would say the amount is less important than the consistency, and then beginning with the end in mind. So really getting an idea of where you want to be at a certain period of time, or what you think this portfolio should do, and say, okay, I think that if it's reasonable that, I'm not earning anything in my bank account, obviously. So, if I made 1% a year, that would be good, right? Maybe. But if you have a portfolio, let's say that it's earning you on average 8 to 12% a year, in Forex, I think you could make, I think the difference is what you make in a year, you could probably make in 3 to 4 months. And so it gives you it really collapses time for you in respect. So it's not about getting these outlandish returns, which a lot of people now, I'm grateful that I started 15 years ago because I've seen the internet kind of become something other than what it should be as it relates to trading. But it's not about that thing more than it is about consistency and relativity to what you understand. So we're looking for the same returns, even with our most aggressive accounts. We're only looking really to earn 7 to 9% a month. But in most cases, people aren't earning that, maybe they're earning that in a year. And so what we do is we kind of collect time and allow you to get more bang for your buck over the same time frame, if that makes sense.
Yeah, and I've always tried to use an analogy that is, even though I'm European, but the analogy that I think fits very well is baseball, right?
Mm-hmm.
Like if you say, okay, I like what I've heard from Kevin about baseball, so I took his course and then I stepped to the plate and I swung, and my expectation is it must be a home run, otherwise it sucks and I find somebody else with a different name, right? Versus when you really look into it, even just a little bit, keep in mind European, no clue really about baseball. But what I understand is the best world-class hitters, it's something like about 35 to 38% of the time.
That's exactly right.
The way they actually get there, and you saying, like you're really good in your particular type of baseball when you get 60 or 70% of the time. But the thing is, they're getting to the bat every game, 163 games, probably 3 times in the rotations through all 9 innings. And if you just add how many times are they at the plate, it adds up probably to 1,000 or even 2,000, depending on who they are. Right. And then they're considered world class if they get to anywhere above 30%. Right?
I totally agree.
If you look at it that way, and that's why I say even in real estate, where it's a little closer to trying to hit a home run, most of the time the first few tries are not going to be home runs. Now what we're trying to do is that you're not losing money, right? Like that you maybe get a walk or something like that.
Exactly right. Get hit by a pitch or something. Yeah, something.
Yeah, something, like some weirdo thing that happens, but definitely don't want to basically strike out. But still, it takes a certain amount of practice to get there. But the assumption, and that's what I think you mean as well when you say the internet is deteriorating rapidly in the direction to promise everybody a quick home run no matter what. You don't even need to do anything for it. You just sign up, give me $5,000 and I guarantee you a home run. That obviously doesn't work, but you do it often enough, then a few people get rich and the people that tried are just disgruntled in the end. So
yeah,
okay, very good. The other thing real quick, because I think for our audience it's important to ask, you mentioned you almost exclusively trading yen versus British pound. Now those are obviously international currency. What kind of events are moving the needle where it really makes a difference? Because I oftentimes feel, especially in the US, we don't really pay that much attention to world news, and if, then it's always because there's a new war broke out or some kind of crazy thing or catastrophe happened. But currency exchange is typically not much in the news, other than maybe, okay, this year it was cheap to fly to Europe on vacation or something.
Right. No, that's right. So so there, the US dollar in most cases, unless you're talking about what we call exotics or things that are kind of out of the ordinary, the US dollar is normally just like in the world, it is the kind of the settlement currency. So the dollar is still tied into even the British pound and Japanese yen. It's really kind of a tether of the British pound and the dollar and the yen, right? So it's like all tied together. So the dollar still central to it. And so unemployment numbers, CPI numbers, when you talk about consumer price index, maybe, but the add-on when you add the foreign currencies or the European or the non-American US based currency is that now you have to, pay attention to what's happening in Great Britain as far as economic development or their unemployment and all that to see how it changes. And then Japan, I feel, just personally that everybody manipulates their currency to some degree, but Japan has kind of a hard peg, like target that they want to keep their currency at. So they can kind of impose their will because obviously they have the most currency to use as far as the Japanese yen. So I look mostly at, what's happening with any Japanese economic events that are just regular recurrences, not surprises. Nobody can plan for a surprise, but any regular monthly numbers, any monthly numbers for British pound. And then I'm looking for major, what we call high impact news in the US, like non-farm payrolls or things that we think are going to affect the market, even interest rate decisions, with the Fed decides if, are they going to stop raising rates or they're going to pause them or do that. All those things at least temporarily affect the movement of the currencies. I always tell people I'm not against fundamental, and I think fundamental analysis is very powerful because I feel like fundamental analysis is where you form your hypothesis about how you trade, no matter what market you're talking about. And so I said, but what I have learned over the years is that in many cases, if you really do it and you understand it to a certain point, I've been able to, it's not about prediction. This game is very much about being a follower more than a leader. Like followers get paid way more than leaders do in this game because leaders get shot first in this game, so we don't want to, when you get out there, that's where you get stopped out. But what I found is a lot of times from a technical perspective, because the market is a zero-sum game, you can give yourself a high probability of being successful when these news announcements happen by understanding what the greater context is happening on the charts. And so technicals, I definitely am more of a technical trader, but I look at the fundamentals to try to inform my mind about what other people may be thinking about the markets, right? So if that makes sense. So the psychology is the fundamentals, but the technicals is really where people they really, it's almost like voting. You can say you support one candidate, but when you go into the booth, the technicals is what you actually do.
Absolutely. Yeah, I mean, since you said you're mainly trading between British pound and yen, I hadn't planned to ask you this question, but I have to because I want to know, were those special 4 months, were those a home run or a dud for you?
You say that which 4 months?
The Liz Truss presidency or premiership?
Oh, nothing. I mean, like for me, it didn't affect me. I don't even know. Matter of fact, I don't even know if I know what you're talking about, to be honest with you. Just because
well, there was a period, when was that, like a year ago or something like that, that Boris Johnson stepped away and this lady Liz Truss became prime minister.
Oh, yeah. Okay.
And she announced some economic changes. And within like 3.5 months, their pension system basically went crazy. The pound went crazy. The economy went crazy. I'm just curious, when something like that happened, if you were lucky and you won big, or if you were unlucky and you lost big, or
I have to go back and check, but my feeling, because now I remember what you're talking about, is that we won. We were shorting the British pound versus the yen at that point. So we were shorting it and probably were already short. But then when she went in, made those major changes and everybody rejected it. Like, when she did that, it like went down really quickly. So what it did was probably, if I go back and look, it helped me hit my target faster.
I'm sure. I was assuming that you would say such a massive impact. And I think the lesson there is, it's not really so much was she affected by being ousted within 4 months, shortest prime minister ever. But more like making such a change so rapidly that it impacts the market so rapidly, it's more likely that a significant change has a significant impact, than, and even if you didn't make the trade on the first day, I mean, when you can see the thing goes like totally down the toilet, you can probably adjust properly,
Right on. Exactly. No, you're right. So that's the thing when I talk about surprises. Those are the things that make the market move very quickly, so people already have an expectation, and most institutions have already priced in either side, right? They priced in whether it's going to go up or whether it's going to go down.
Yeah.
But when you come in and do stuff like that, they hadn't planned for that. And so that's where the market takes these big moves. And then a lot of times the market to come back, it's just kind of it's more of an impulsive move.
Right, exactly, which is actually exactly what happened. I mean, the thing is, I was reminded on that situation because you said sometimes you can make, what other people make in a year in a month or two. And I'm sure in that period, those 3.5 months when she was in there, I mean, she became prime minister, probably took like a month for her to announce this stuff. So it really only took 2 months and then she was gone and everything was kind of recovering back to normal. But in those 2 months, there was probably a great opportunity there if you were into something like what you're doing.
Absolutely. I remember hearing about that, and I remember having my energy is like a good feeling around that. So I'm sure that we want.
Yeah.
I mean,
That's always good. You can always wish for another one of those Liz trusses.
Hey, I'm always hopeful, brother. I'm always hopeful.
Some people are saying Boris Johnson's coming back. That would probably run the market crazy too.
That might, that might make me some money too.
Yeah, exactly. Okay, so with all that being said, I think people got a pretty good idea what this is, what you're doing, and that is quite different and shorter term than what we're doing with our very long-term real estate investing. So those last two questions, unrelated to any trading and stuff. The first one is, if you could meet anybody, who would it be and why?
Wow, that's a great question. I would say I would want to meet the original man. I think I would want to meet the original man. Like, I think just like this, to really have a sense. And the reason is I think it would kind of clarify a lot of things, that a lot of the premises upon which we live, all of them can't be correct. And so I'm like, okay, let me just go back and like get the original knowledge and the original observation of where we came from. I think that would be intriguing.
Yeah, I would have to admit that is confusing to me, because would that be God or the first person God made, or who is that?
Right. So, so I would say the first person God made, so I can like actually observe and see how we came to be, like just for my own curiosity. Good comeback. I like that.
Yeah. So you have to probably rephrase that, otherwise you might piss off God, right? If you.
Yeah. Right. I hope. Well, if I'm not dead by the end of this video, this maybe I didn't piss him off too much.
Right. So the last question is, if you had a time machine, where would you go and why?
I would say I probably would go into the future.
Okay.
I would go into the future and see what like all the decisions that I've made to this point, see how they play out. Yeah, go to the future and see what happened as a result of all the things I think I'm doing correctly now with my wife and kids and everything, and see how life turns out. So I go probably, not too far, maybe 50 years into the future.
Okay, cool. So if people are intrigued with our conversation and want to get in touch with you, maybe add maybe a more shorter term investment strategy to what we're doing already, how do they get in touch with you?
Sure. Go to our website, actually is the easiest place. FM like a radio station, FM trades with an S.com. And then when you go there, we kind of have two paths. One is called DIY. That's for the person who wants to learn how to trade for themselves. And then we have DFY for people who, coincidentally, we work with a lot of business owners and entrepreneurs, and some of them don't feel like they have time to learn how to trade initially. And so we just start with the DFY first, and then they get back to learning how to trade later. So whichever path you choose, it doesn't matter to us, but fmtrades.com, and you can even get on my calendar to book an appointment there. So that'd be great as well.
Okay, Kevin. Yeah, that's great. And we put all that information, contact and so forth in the show notes so people can download it. So thank you so much for being on the show. Everybody out there, be safe, stay well, and I talk to you in the next episode.
Thanks, Axel. I have one more thing for you, if it's okay.
Go ahead.
Okay. I think I was asked if I would have something for the guests. And so I'll definitely, if they reach out to you or to us, we can get them my digital book about trading the markets and kind of what that entails, or like a high level digital book that I created. And then we also have a couple coupon codes if people choose to join. I'll send them to you, and people can use those to take, up to $10,000 off of getting connected with us. So whatever they want to do, we can find a way to accommodate.
Yeah, that's very cool. And thank you for giving those gifts to our audience. And then Nadine will make sure that the people that get and hear us talk about it or see it on Apple or Google or wherever they consume their podcast, that they find a link, because we don't want to just put it out in public. We would make a link so that they get in touch with us and we can provide it to them. So thank you for your generosity about that.
My pleasure.
All right.